Hi everyone. As promised, I'm going to do a H4 time frame example now for people that perhaps are in a different time zone or cannot monitor trades every hour. And so on the H4 time frame, what I'd like to suggest is essentially doing the same process of buying at the low and then looking to exit at a new high for the week, and then reversing your trade there, okay? Or obviously hedging, okay? And the easiest way to sort of explain this is just to go through some examples that should make it clear. Now, obviously, here's the start of our week, okay? This is the pound dollar we're looking at. So when we start the week here, we have we've got no range to start from for price to make a new high or new low from. So when we start the week, obviously it's going to be it's sometimes going to be a bit where you can't really define it as a high or low for the week because it is both at the same time. So what we do is we're just going to have to start our process by just going by the previous close. So for instance, in this example here, we've closed up, so we're just going to assume that this is the low of the week, and we go long here, okay, and we place our stop below the low. And what we really want to do then is we're looking for price to now make a new high for the week and trigger a trade short. Okay, so here you can see we make a high, close down, but we don't break out, and then we close down again, we still don't break out, and then we make a new high here, close down, and there's a breakout entry here. Okay, so at this point we are hedged long and short, so I'll just mark that. Here's our entry, here's our low where we put our stop, here's our entry short, here's our high where we put our stop. Now whenever you get this scenario, obviously we can take profit on this long, okay, and just go short, or we can manage the position on this long, so we could move our stop up to break even, or we could just leave the hedge. Okay, so let's assume that this is a small win here, so in this instance we're just going to leave the hedge. Okay, so then we'd wait until price broke out of the hedge, okay, out of these two extremes. And as you can see, the long gets stopped out, price breaks down, so now we'd be holding this and looking for a long setup, okay, and here would be the long setup here. And then again, obviously you have the same decision: leave the hedge, manage the position, or close the short and just take the long. So if we left the hedge, then price would break down again, and then we'd have one more long here and then a final long here at the end of the week. Okay, and if we closed this one for profit, and it's it's a decent profit there, it covers that and gives us some more profit as well, then this would be the low of the week, and again we'd be looking for a new high. But you can see here then we get a reverse trade, and you can still take those reverse trades. The idea is to try and hold these positions until you get a space open up between your entries. Okay, so when it's a small profit, you're best to hold the hedge and wait for it to break out, and so on. Let's just go on to the next week and do another example. Perhaps I'm just going to make it a little larger so it's a bit easier to see. Okay. So here again, here's the start of the week. This is the first full H4, so you'd have been looking for a long, and then you close down, so now you'd be looking for a short. Now let's say that this H4 is the one that you sleep, okay, and then you wake up at the close of this H4. Well, just start your process there, okay. It's essentially the same. if it's moved a long way from the high, then you have an option. Let's say you started here and this one broke out here. You can place your stop over the bar, or you can place it over the high. The further you place your stop, then obviously it's going to get less likely to get stopped out, but you'll be risking more. Again, this depends on which way you've decided to manage your position size as well. Obviously I can't sort of go through all of the examples in this, but let's just imagine that we traded all of the H4s. So you'd take a breakout short here with your stop here, and then at this point you'd have a hedge. Obviously you wouldn't close it, it's not worth closing it, and this long gets stopped out and price would continue down and you're looking for longs again. Maybe you just got taken into this one here, okay, and again I would probably hold the hedge. Price breaks down again, and then you have another setup here, and you might decide at this point that you have these two losses and this one win that you just want to close out, and you know you're in the last day of the week there, so you have that option there to close out and call it a profitable week. Or you could have taken this one and price then broke down again, so you would have had 3 losses and a slightly bigger win. Okay. So, you know, really we're doing the same thing, but we're just not going to skip that. We're just not going to skip that part of the week where, part of the day where we have a rest session like we do on the H1 time frame. I'll just go through one more week here, and then I just want to go and find a week that pretty much ranges. So here, well, this would be your first breakout long here. No shorts up to here. So at this first short, you might decide, well, you know, that is a decent win. I'm going to close that out and take the short. Okay. Then if you want to use the reverse trade, you can take the reverse trade here. Okay. That would have stopped out, and then you could have taken another reverse trade here with your short stopping out, and then that's through to here at the end of the week. Okay, and you could hold this hedge then into the next week if you wanted to, or close it out. Choices there for you. Next week, so first breakout here, that would have stopped out. Oh no, that's a short breakout, isn't it? Yeah, that stopped out, and then you would be short here and long here, and then this long would have stopped out with this drop here, and then you have a long setup here. Again, you have now a choice whether to take profit or not, or move to break even, and then this long broke up here. So, you know, that's how I would handle the H4, and it's also how I would handle the daily if I wanted to trade the daily. There is one other option, which is to not do the reverse trade at all, and literally only trade when they're new highs or new lows for the week. So I'll try and find, okay, here's one that chops about a bit more. So in this instance you would have gone short here, okay, and then price would have come back and given you a long of the low of the week. This short would have stopped out, and then here's the high of the week. So here would have been your short here, and then you'd hold that, and that would have gone all the way through to the end of the week. So you would have carried that hedge through into the end of the next week. And you know, as with the H1, what you need to accept with this is you're going to have some weeks that just lose, and you just got to Whatever you do, I know it's really tempting to sort of try and change things to remove those losing weeks, especially when you've just had one, and think perhaps there's something wrong with the strategy. But all you can do really is just back test as many weeks as you can, get as much data as you can, and just have the realistic expectations. See how often you have losing weeks, and if you have that positive expectancy with the strategy, then you just need to repeat live what you were doing in the back test data, and then obviously keep that data as well. Perhaps keep a little crib sheet next to your computer and mark down last week's stats, and go like that. An option you have trading this way, which I think Mike mentioned in the forum, is let's say we took this breakout here and it stopped out, and then we took this breakout here, and we see we don't get a short up until here, and then that stops out, and then price spikes up here, and let's say up here, you've got say a loss of 50 and a loss of 70 and a win of 350. You can if your data says your average winning week is like net 150 pips, there's no reason you can't say, okay, I've caught a good move this week, I'm going to call it a day, and on this pair, or even trade in full stop. I know there's kind of some people don't agree with that idea. For me, it makes sense if you're using your data to trade, and so that's just another option. It'd be great to hear other people's kind of takes on this, if you've got your own little twist on it. The beauty of it is, if you go back and look on H4, there's a couple of things to note. One is that okay, let's say we took this long here and it stopped out, and then we took this short here, and then you don't get another long until all the way down here. You'll quite often catch these big moves. There tends to be either one or two of these every week, and if you catch one of these big moves, it's not a bad time to call it quits for the week. And they're very common. Do some backtest data, and you'll see. Let's have a look at another example here. So went short here, stopped out, went long off the low, and then maybe you took this short breakout here with your stop here, and then this one breaks down all the way down to the end of the week. So it's quite if price moves like this, it's quite low maintenance. It's certainly lower maintenance than the H1. One final thing I want to point out is when you do your back test, look how many of the weeks end up at the high or low of the week or thereabouts. If you see, this week we closed right up at the high of the week. This week we closed down at the low of the week. This week it's down low of the week. Okay, this week it didn't, and this one didn't, and this one close to the low of the week, just recovered in the last, and this one didn't, but then this one did, down at the low of the week. This one at the high of the week. This one didn't, and then this one did, and then this one did. And you'll find that the weeks where we close up at the high or the low, they tend to be the weeks that you win on, okay? And the weeks that kind of chop about and you close near the middle of the price, then they tend to be harder to win on, okay? So, that's my ideas on H4. It takes a little bit more patience, but if you're, busy doing other stuff anyway, then it's really good to be away from the charts. And, I try, and even when I'm trading H1, I try and stay away from the charts as much as possible, because I think there's there's nothing more destructive than watching candles form, especially if you're having a bad week and you're watching, a candle form against your next trade. It's really difficult to keep a clear mindset when you do that. So that's it on the H4. I'm going to do one on the M15. It's essentially the same thing again, but we use the Asian range on the M15. Have a good weekend, everyone. Leave me some comments, and I'll see you all on Monday.